Joining us now for more insight is Vice President of Market Research at TipRanks Christine Short. And Christine, I mean, we just heard from the president. Akiko laid out some of the policy proposals that we're looking at here. But when we're discussing all of these, how do you think that that might address the fears out there right now when people are potentially losing jobs and thinking about buckling down for the long term?
Yeah, I know, and that's the issue. Like you mentioned, we're seeing markets aren't so sure what to make of this information. I think yesterday was very surprising to hear President Trump say we might sort of be living in this world till July or August. So I think everyone's kind of doing the math and saying we might see a Q2 that reports negative GDP, but August, that's the middle of Q3. That would be a second quarter of negative GDP. That firmly puts us into a recession. So you saw the markets take a dip based on that because we've been waiting for this information. We've heard, the peak is 4 to 8 weeks away. But to hear this could last all summer, I think some people are thinking, how are we going to continue on like this? And a lot of people, the math just doesn't add up as far as can they go this long without employment? So a lot of people are trying to figure out how they're going to make this work.
Christine, as you point out, the consensus among economists seems to be that we are, in fact, headed towards a recession. The question is how long that is likely to last, how severe it is, depending on the kind of stimulus we could get from the government. Secretary Mnuchin's comments earlier saying we will be sending checks directly to the American people. I mean, we don't even know how much the amount is going to be, but how significant is something like that when, as Zach points out, people are pretty much holed up in their homes right now, not willing to go out and spend?
Yeah, I think we were hopeful a couple of weeks ago for a V-shaped recovery. As many have said, look, the economy was very strong going into this. There's been many comparisons to 2008 where the underlying economy wasn't strong. We had very low unemployment. Corporations were doing quite well. Once we get past this, the economy will go back up and we'll see a V-shaped recovery. Sure, people are looking for relief, but as you said, where are they spending it? They're finding some places to spend it, but if they think they could be out of work for long term, I don't think you're going to see them filter that back into the economy. So that's something that we have to think about. People might hold on to those checks as they prepare for the long-term future, and we don't quite know yet.
Yeah, Christine, you talk about doing the math, and right now we're looking at a potential stimulus package, if you believe Steve Mnuchin here, of $850 billion in terms of addressing the problem. That would be much larger than the TARP total of $700 billion we saw back during the financial crisis. But when we look at this, it's also coming at a time when a lot of people have been talking about what's going on in the commercial paper market right now as companies are struggling to secure short-term funding. There have been a lot of question marks about debt out there when we look at the corporate debt bubble, just highlighting that right now, close to $16 trillion in outstanding debt, and the stress right now when we think about what could be happening to some companies that might be strapped for cash. How does that complicate what's going on here in the way that we're seeing the Fed react as a lender of last resort to maybe address those liquidity problems?
Yeah, look, I've covered corporate earnings for over 10 years, since before the last recession. And I think what's been most striking to me is corporations' reaction. So they've all, specifically within the travel and leisure sector, many have come out and withdrawn guidance that they gave at the beginning of the year saying, look, this is no longer relevant. We will be downgrading, but we don't know by how much. And to me, that's quite scary because that filters through to what analysts are saying. Analysts are unwilling to reissue their guidance if they're not sure what companies are saying. But it makes me back, do many of these names, he mentioned Boeing, he mentioned the airlines and potential bailouts here. Wonder how many of them are regretting those very long, decades-long programs of share buybacks. That's one big issue here is there's not the liquidity on the balance sheet because over the years they have chosen to use their cash to repurchase shares. We all know why they do that. It's not to benefit investors necessarily. A lot of times it's to bump up that EPS number, which of course helps management look better. And so I'm kind of looking into some of these names that now need this bailout and what they've chosen to do with the cash that they had and seeing that they don't have the short-term cash right now and are having to employ cost-reducing measures such as furloughing staff and who knows what else as if they don't get this bailout.
No, it's a good point, and it's something that we saw even the banks now agreeing, a consortium of banks saying that they will not be executing any share buybacks, at least in the short term, to help address those liquidity problems. But for now, Christine Short, thank you so much for joining us. Appreciate you taking the time. Hey, investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.